Meena has also gained exposure to the US and UK cyber insurance markets through extensive research and interactions. She also speaks regularly at conferences on the risk transfer options in the digital world that most businesses operate in today. Meena has an MBA from Monash University, which she feels enables her to have better business conversations, plus is a member of AICD, ASA and IAP ANZ. Please welcome Meena to the stage.
Thank you for the opportunity to present here at AusCERT. It's great to see you all here. Thanks for coming. So we faced a global cyber attack recently that we're all aware of. A ransomware attack hit 3,000 computers in 150 countries that locked computers, and hackers demanded ransom to unlock those machines. A large number of affected businesses at that time would have tried to find their cyber insurance policy. Well, I hope they knew where to find it and someone knew what the policy covered. Such businesses now looking to make claims for the expenses incurred in unlocking their computers after the incident must first understand the obligations that cyber insurance places on them for governance, risk management, and compliance. Cyber insurance is not just another policy. It does place a lot of obligations on businesses for which there is very little awareness in the market. I'd like to start by actually talking about what cyber insurance covers and what sort of a policy it is. Cyber insurance is a policy for both indemnity and liability. Certain policies in the market would cover just indemnity and some cover liability, but cyber insurance covers both. Insurance that indemnifies your business for all costs of bringing back your business to its original operational state is called a policy of indemnity. It helps you by paying you all the costs that your business incurs as a result of the business interruption. Cyber insurance also is an insurance of liability as it pays for the cost of breach of any legislation due to the cyber incident. Crisis response is the cost that your business has to incur in responding to the cyber incident. All these costs that are listed here can be claimed from the insurer. So including regulatory expenses, any payouts that you have to make, any forensic investigation that is involved in response to the cyber incident can be claimed from the insurer. So what is involved in buying cyber insurance? When you buy insurance for your business, you need to fill out a proposal form. What is the purpose of this proposal form? The purpose of my presentation today is to make a case for the fact that cyber insurance actually places governance obligations on the business. Good governance measures promote oversight and control to the hierarchy of the organization to build resilience and sustainability. Insurers like to see evidence of good governance practices and disclosure. When you fill out a proposal form for insurance, you are expected to show proof that your business is resilient and that you have evidence and strategies in place to minimize disruption. Why do you think that is? Why does an insurer wants to see evidence of incident response planning or business continuity planning? Because the longer your business is unoperational, the more it costs to the insurer, because as part of cyber insurance, they want to pay you for your business interruption expenses. So they like to see governance, proper governance in place to ensure that your business is resilient and is sustainable. Similarly, are you doing enough to build and sustain trust of your stakeholders? If you're not capable of maintaining trust, you can't be sustainable as a business. No insurance business wishes to insure your risk, because the most important thing in a digital world is a trust that you maintain with your stakeholders in all transactions and in the promises that you make to them. So they want to see evidence of what is your privacy management policy? What is your data encryption policy? How are you managing the information assets? All these are reflected through the questions that are asked in the proposal form. Do you also enforce enough control throughout your organization with policies and procedures? In applying for insurance, have you disclosed previous incidents or circumstances that could lead to an incident or a claim? Has a director signed the form? A question that was recently asked of me was that if a director fills out the proposal form and there is a cyber incident later on, which through evidence the insurer comes back to you and says, look, the information in the proposal form is incorrect. However, in the meantime, your director has resigned and left the company. Would the claim get rejected in such an instance, or would the insurer still pick up the risk? I can answer that, but the point that I'm trying to make is that the form itself expects a level of truth and compliance to come out, and the whole process of buying policy is actually adhering to the compliance requirements expected by the insurer. So the point is that buying cyber policy is not the same as buying any other insurance policy. It does demand a lot of obligations on yourself. So questions like these, whether you have a firewall to prevent unauthorized access, do you regularly implement patch management policy? Do you conduct security training for your staff? These are from the proposal form. I have a few proposal forms on me, if you'd like to take one. But these are all reflected in the proposal form that you fill out. And these connect back to governance and your risk management practices. Once you sign the proposal form, that is a truth that you have revealed about your current state. Should the insurer find that the information provided is incorrect in the instance of a claim, then you can't expect a payout for your cyber incident expenses. Good governance practice also stipulates that businesses must take all their actions keeping within their risk appetite. It is very common for CISOs and CIOs to say that they much prefer to self-insure instead of transferring the risk to the insurer. But may I ask you, what is the real question when a business says that they much rather take on the risk instead of transferring the risk to a third party, which is the insurer? What are they really saying? It's really, the question is one of risk appetite. I think the most important thing we must remember today when we transfer risk or mitigate risk or eliminate risk as a business is the question around risk appetite. Does the risk appetite of your business permit you to assimilate all the costs involved in a cyber incident? And how many cyber incidents would you have in a year? And therefore, what is the total cost of your cyber risk management? Have you quantified each risk as a business? Have you quantified the costs involved in managing each of those risks? If not, then to answer the question of what is your risk appetite is not going to be easy. So should your business decide to transfer risk, the value proposition for cyber insurance must be self-evident, which is that cyber insurance as a risk transfer strategy comes with a unique value proposition of saving you time and cost in responding to a cyber incident and making expensive payouts and the cost of litigation. It also provides you with legal and PR experts to rebuild trust and reputation. What most businesses will tell you that after a cyber incident, that loss of trust and reputation weighs heavily on their mind because the result or the effect of, or the aftermath of loss of reputation can be felt for many, many years. Do we have a methodology for quantifying loss of reputation and its result on the business. We don't. But then how does cyber insurance help you build reputation and trust after a cyber incident? Well, it's quite simple. Initially, when I started out as an insurance broker, I was naive enough to believe that there would be a sublimit for reputation. The insurance company would quantify loss of reputation and put a sublimit on it. In reality, what happens is that they help you pay the PR expenses after the cyber incident, with the logic that the sooner a business engages with its stakeholders, and most importantly, its customers, after a cyber incident, the more likely it is to rebuild faith and trust in the business. The insurance company puts at your disposal a claim manager immediately after a cyber incident, who coordinates with IT forensics, legal experts, and PR experts. These experts provide you with an incident response team to investigate and mitigate the cyber threat and bill the insurer for all the expenses. So just imagine that you have had a cyber incident, and within 24 hours, you have a cyber response team at your disposal, given to you with no cost attached. The insurer will be in touch with you with the help of the claim manager and the other experts to give you a report which tells you exactly what has happened, what can be done about it, and what the insurer feels is the next best approach. Should they give up after a week in restoring the business to its original state, they are willing to take on the cost of business interruption and loss of revenue that your business may have incurred during the week. But at the same time, they will try to restore the backed up data and systems that you would have taken care of, which they believe that you should, and get your business up and running. But any loss that happens in that period, the insurance company pays for. What is the process of buying insurance? I'd like a show of hands. How many of your businesses actually do have a cyber insurance policy at this moment? That's two. How many of you are thinking of buying one? Or you don't know? Okay. Well, for businesses that are buying insurance at this moment, they are two types of businesses. One is that one of them is the category where they have the existing broker come to them and say, all your policies are due for renewal, and here's another policy that you need to get. There are so many cyber incidents are happening. I'm going to get you $10 million, $50 million for this policy, and this is the extra amount you have to pay. So the person in charge of insurance says, yeah, that's okay. We'll get cyber insurance, and thanks very much. And they invoice, the broker invoices the business, and that's the end of the story. Then an incident happens, and the manager says, well, I think we have a policy that responds to this kind of an incident. They make a claim, the claim is rejected on grounds of that the business had shared certain information, it was incorrect, or the business had been negligent. What is recommended in buying cyber insurance is that it's a more involved process than buying any other insurance policy. So it places more obligations on your business to do the due diligence along with the broker. Here is an example of exact wordings from 4 different policies. And the risk is cyber extortion. So, and in this instance, there's actually a threat where a hacker is demanding a ransom. Now, if your business has gone through the process of risk management and defining all risk as part of the risk register, then they would certainly have cyber extortion as a risk. Now, when they have looked at cyber extortion and said, look, we can't mitigate or totally eliminate this risk, what is the cost of transferring this risk and what are the options available? So the insurance broker then comes in and says, I've got a policy that will pay you for cyber extortion and will help you, take care of the financial risk that, a ransomware attack can place on your business. So you say, okay, that's great, but what is the next step? The next step is really sitting with your broker and saying, I like to see reflected in the policies, in very simple English, the exact scenario that I have outlined as a business risk. That is, that my systems can be locked through a denial of service attack or a ransomware attack, and the hacker can demand of me a ransom, right? And I have to respond to that incident. How will the policy come in? Show me the exact wordings in the policy which respond to that sort of a scenario. Very few businesses ask this sort of a question. But my recommendation is that it's a process that you have to engage in with your broker. And this is an example that I'd like to share with you. Policy 3 does not cover cyber extortion. There's nowhere in the policy wording where ransomware is covered. How about policy 1, 2, and 3? 1, 2, and 4. They all cover cyber extortion. That is the expenses involved with unlocking computers, paying ransomware, all of that, any tip-offs, restoring systems. But they all read differently. Would all these 3 policies respond? Is one policy actually placing more emphasis on a certain kind of a denial of service attack? Or are they all similar? So, I could very well say policy 2 is really suited for your business. This is, it has very good wording for ransomware. Go for it. But how do you know that? Unless you read the exact section where cyber extortion is outlined, and it gives you the peace of mind that, yes, you do have a policy that will respond to a scenario like that. What are the other questions that you ask of your broker when getting an insurance policy for yourself? How many of you have done an insurance health check to understand whether your existing policies are responding to the change in environment, to changes in legislation? Is an insurance health check part of your cyber security health check? Well, it's again a very important and critical step involved in the decision-making around cyber insurance. And why is that? When you receive quotes, you receive different quotes for your cyber insurance. Do you ask your broker, what are the exclusions? What are the deductibles? What are the sublimits? What are the overlaps between existing policies? Is cyber insurance policy the same as a cyber crime policy? Do we know the difference? Do we know the difference between a cyber crime policy and a management liability policy? So if you have a commercial crime policy, would it respond to a phishing attack, for example? Because it's a criminal intent. Someone has sent emails to your staff with a criminal intent of finding details of a financial institution, for instance, and have managed to procure them. That is a criminal act, isn't it? Should your cyber policy respond, or should your commercial crime policy respond in that instance? We have to ask those questions, right? What if, someone turns back and say, look, your staff has had a history of bad relationships with the business. They were disgruntled. They deliberately acted in conjunction with the hacker and deliberately clicked on that email and passed on the details. So the insurer says, we suspect that there has been a criminal intent behind the action of somebody fraudulently entering bank details or sharing bank details with a third party. You might argue it's a cyber incident. There was social engineering involved, there's a phishing email sent. So how does your broker answer that? It's a very tricky one, but something that I want to share with you today. The distinction is, if you have a happy employee and they click on an email and it locks up your computers, or the hacker ends up getting some confidential information about your business, that's human error. Cyber insurance would respond to human error kind of scenarios. But what if the same staff member has had a history and had recently left your organization, and it's proven that they were disgruntled and they wanted to get back to your business and take revenge or whatever? Then it's malicious intent, and commercial crime policy will react. Same scenario, different intent. So there is a difference between human error and criminal intent. So you have to sit with your broker and understand overlaps and exclusions that might be in the policies. Similarly, social media liability, which is an employee posting stuff on your Facebook page and you firing that employee as a result of that activity. The employee ends up suing the business, saying that it's unfair dismissal. Which policy reacts? Management liability policies cover for employment practices liability if there is a legal action taken by an employee. But management liabilities do not cover for social media actions or scenarios. It is the cyber policy that must react, but cyber insurance excludes all employment practices liability. So there are lots of obligations on you for compliance, governance, and oversight, also when you intend to transfer risk. Because simple methodology or intent of buying insurance is not going to give you 100% peace of mind unless you fulfill your part of those obligations as well. Can you also identify the point where the incremental investments in cybersecurity for elimination and mitigation of risk do not yield incremental returns and your cyber risk does not decrease? How can you do that? But there must be a point where you as a cybersecurity vendor or you as a business investing in cybersecurity could say that there's no 100% solution out there, but there is a point until where we have to eliminate and mitigate risk. But beyond that, we have to transfer risk because we can't endlessly keep on investing in cybersecurity. And at that point, we have to transfer risk, and cyber insurance becomes part of your total cyber risk management strategy. That's when you buy insurance. There's another way to look at this. One is, how about getting a free assessment of your cyber risk and sourcing some quotes and saying, oh my God, this is too expensive. The whole process of transferring risk is too expensive for us. And your broker tells you that wherever you have ticked no, go back and work on those initiatives. Come back and we will try to get quotes again and see how much of your cyber risk is assessed by how your cyber risk is assessed and costed by the insurer. And that can also enable you to assess what you're doing right and what more you have to do. For instance, a client of mine didn't have a business continuity plan, and they were denied cover, and the premium was really, really high. I just had to ask them to download something from the internet, a draft of a business continuity plan, work on it for 2 months, have something in a draft format. I went back to the insurer. They were willing to cover business continuity risk after a cyber incident, and they got a very reasonable price premium after that. So maybe it's time to just engage with your broker just to see how your cyber risk is costed through a free assessment. So just with the pure desire to, support that process, you can take a few proposal forms from me, go back, fill those out, or you can email us, and we can take it from there. Otherwise, it's now time for questions, I guess.
Thank you, Meena. If anyone's got any questions, put your arm up and I'll come and bring a microphone over to you. I've got a question.
Sure.
Before, when you were talking about the different wordings within policies, insurance policies and so forth, you said they can be covered in different ways or different, wording, which makes you either covered or not covered. In various places where I've worked, the areas that look after our insurance policies are not quite as aware of what they need to be from a cyber insurance point of view. So often we don't get involved as security professionals, but they don't have the understanding of what certain, clauses need to be in there. How should we best address that where we know there's that gap, but we don't actually get involved in reviewing those policies?
Actually, that's a very good question, and I think you've basically highlighted what the real issue is, because departments who buy insurance have been buying the same insurance policies for 10 years, 20 years now, and they're happy to buy yet another policy, and they don't know what the fuss is about. So are we just going to leave it like that? Are we just going to let, like a team, the insurance team, procure insurance policies and procure cyber insurance? What can be done? And how do you work around that? I feel like, we need to highlight cyber risk as a core operational risk and not an IT risk. So, because ultimately in the digital world where we have digital assets and systems, they underpin the ability for a business to be operational at any time. If those systems or data transactional interfaces are not running, then a business is not functioning. So if we can classify cyber risk as an operational risk, then it gets more attention. And then now the argument that is coming in is that cyber risk is being so critical to businesses and being a reputational and involving reputational risk is also something that requires board oversight. So board members must be aware of it, and they should be able to ask the CEO questions about the sustainability of the digital operating model that every business has now. So ultimately, I think someone has to make a case for it. How do you make a case for it? I don't know. But I would say that sooner than later, the insurance team and the IT department are going to be asked some questions, once cyber incidents happen. And they may not have all the answers. So the executive would have to get involved. And if the CEO gets involved, they're going to have to go to the COO or the CIO or the CISO to say, this is a major business risk now. Cyber risk is a major business risk now. What are we doing about it? And that's when the whole risk management approach might become more common. So, there would be more attention and time spent on qualifying and quantifying management of cyber risk. And then the conversation will veer towards cyber insurance.
And do you think these insurance companies should be, so PCI, for example, you do a yearly assessment as to whether you have controls in place, whether they're adequate, and if they aren't, then you have the big stick of, well, you can't take payment card. So should insurance companies be doing the same thing? So I know I've come from, previous to my current job, I worked in a financial institution. Every year we would have our insurance company come in with our board level people and some executives, and we'd spend 2 days with them going through all our security controls, what we could do and all that sort of stuff. And then I've worked at other places where we haven't ever done that, and we might have a half-page questionnaire saying, do you have antivirus, do you have a firewall, and that's about it. So do you think that insurance companies should be doing more to evaluate organisations to make sure they have those controls in place? Because we keep hearing these horror stories of people saying, we had cyber insurance, when we came to claim, they said, sorry, you didn't have the right stuff in place, you didn't have the policies, the controls, and we can't give you any insurance. Should the insurance companies been doing more in that aspect, do you think?
Again, that's a very good question because that clarifies the responsibility of the insurance company and clarifies the responsibility of the broker, because your key interface with the insurance company is the broker, and that's where your relationship also lies for in terms of having a service provider who's making available to you a product for risk transfer and is a specialist for your business. So you trust this specialist and you get a policy. So insurance companies don't like to get involved, but there is a broker now who is your service provider and who has to maintain the relationship with you and has a liability, a professional liability in that relationship with your business. You know, should they not do their job in advising you on the cyber policy, then potentially, like, you know, you have to get ready to start suing your brokers now, because it's the broker who has to come in and educate you on what the cyber policy covers and the controls that you need to ensure that when you make a claim, it gets accepted by the insurance company. So I'll give you an example of a client. I can reveal, like you said, PCI. They do online payments. They provide the platform for online payments. They're PCI compliant. Because they're in the cloud, their clients transact data, but it's automatically de-identified, you know, financial transactions and all that. I met with them, and then they put me in touch with the legal counsel. The legal counsel came and met me, and I said, who owns the risk? Like, all the clients who are transacting their financial transactions through their cloud think that, you know, their personal details and everything would be all secure, though, you know, the financial transaction as such is de-identified, but what about the rest of it? They said, oh, they do know that it's a cloud and they can't outsource their privacy obligations to the cloud. But still, they weren't sure of who owns the risk. And in case of an incident involving outage for this cloud unable to function, or any data privacy incident, which policy will trigger, whether it's a professional indemnity policy that will trigger because there's been an outage and customers of their clients can't transact, and it is loss of business value. But if the outage is caused by a cyber incident, then the cyber insurance policy would respond. But what about if that incident reveals the details of the customers of these clients who are clients of this cloud provider? So the legal counsel is going through a rigorous exercise of identifying where the ownership of risk is, and they're involving me in the process. So I'm sort of like I'm sitting on the table with them and talking through stuff while they're looking at the legal perspective, they're looking at the contractual perspective, what their contract reads, and whether it specifies insurance coverage for their clients as well. So there are discussions that are happening, but it's the broker who should be talking to you, not the insurance company.
Thanks, Ashley. My name is Anthony. How are you doing? Thanks very much for your presentation. I've got a comment that's kind of got a question wrapped up inside it, I guess, is that insurance is a very mature industry in a lot of other sectors. You know, we've got hundreds of years of building insurance data. You know, we know what it takes for a building to fall over, for example. We've got great data on automotive insurance. We know what drivers are at what risk levels, at what stage of their life, based on where they live and the colour of their car, and you name it. We've got heaps and heaps of data, and it makes those insurance products very understandable both to the insurance industry and to the people buying them. I know that, you know, I'm a 49-year-old male with a black car and I'm going to pay $800 a year for my car insurance, and my neighbour who's 42 years old and female and with a green car will pay less than me because there's different risks because there's a long history. But with cyber, we don't have that depth of data, and I frankly think that even the people who work in the industry don't really understand what all the risks are themselves, let alone I'm not sure how someone coming from the insurance side of things has got a clue about what's going on. How do we even trust that the insurers know what the heck they're talking about when we as an industry struggle with what the heck we're doing?
Excellent. I'm so glad you've asked that question.
That would be wonderful.
Well, I've actually got an answer to that question, so I'm glad you asked it. But it's such a great question, it has to come up, and someone should ask. But does your neighbor really have a green car? Does your neighbor really have a green car?
Hers is grey, mine's black. Just as an example.
Oh, that's a good example, but, well, to answer your question, what we're really asking about is how much knowledge does the insurer have and what templates they have in place for assessing risk. When they take on risk, are they first of all costing this risk properly? And secondly, are they taking on this risk with their eyes open? And would they then honor their, part of the promise in making payouts? Because do they know that there are likely to be payouts, and do they know what would be the extent of such payouts, right? I went to London in 2015, and I went to Lloyd's, and I spoke with all the Lloyd's brokers and syndicates in London. Now, London is like, Anthony, you said, insurance is a very mature market, and Lloyd's is where it all started, right? So it can't be more mature than, the London market. As part of my research, I learned that 1/3 of all American businesses insure their cyber risk also through London, not through the American underwriters, which was a great insight. So as a broker, my responsibility is that if my client is providing the right and the correct information to me in the proposal form, that their claims always do get accepted. But Lloyd's syndicate, so when I'm getting insurance policies for my clients, I tend to choose the likes of Lloyd's. Because first of all, they have the experience. They have now been making huge payouts in Europe for cyber incidents. So, cyber market in the UK is a lot more evolved. Plus 1/3 of all American businesses are insured through London. Cyber incidents have been happening in America are being notified now for many, many years. So Lloyd's have got the templates and the data that the other underwriters don't, and you're right. So as a broker, if I get you a quote from a Lloyd's syndicate that's slightly higher than somebody who's coming from South Africa, I would say, no, don't go for that. Pay an extra $2,000 because you're getting Lloyd's, or another underwriter who's claiming or has a legitimate foothold in a space for certain kind of businesses, like for instance, healthcare businesses. Chubb might have a very good stronghold in that area. So that's the advice that I would give you, because I want to make sure that you get the payout when you need to. Just quickly?
Very quickly. I guess just the follow on from that is that most of those other insurance products I mentioned before, we know the environment that we're working in, whereas with cyber, you're effectively insuring against a changing adversary. So if I insure myself against a ransomware attack, for example, and I have all the correct controls in place that you've specified, but a new attack vector, let's call it WannaCry, appears magically one weekend, which circumvents all the existing controls that we all thought we had, am I still going to be protected, or will I still have that risk managed by my insurance company?
Absolutely.
Rest
assured.
Should or will?
You will, because when I would have interacted with you in getting the policy, we would have actually spelled out that risk and said, show me in the policy wording where this kind of a scenario is covered. I would have said, look at this. Does that convince you? And that is all that insurance companies go by. They go by their own policy wordings, and they go by what information you have revealed to them. If they accept risk, please rest assured that they are not in the game of taking your money and not making a payout. All insurance companies have an ethical duty to make that payout, as long as you're revealing to them the correct information and you've taken care of your part of the story. So that's a leap of faith that you have to make. You have to interact with your broker, engage with your broker more than just buy a policy. Thank you.
Thank you very much, Meena. Here's a little gift from AusCERT for presenting. Can we all please thank Meena?
Thank you. Thanks, Ash.